Mullen Automotive stock may now be a worthwhile play for risk-tolerant investors. Investors are growing more bearish about Mullen Automotive. There are a few reasons why it may be a worthwhile play for risk-tolerant investors. While still extremely risky with a long timeline to a possible payoff, feel free to place a small speculative wager on Mullen Automotive stock. Let's dive in. Is Mullen stock worth a second look? Possibly. Welcome to Timely Investment Research. In early February, it seemed as if Mullen Automotive, after a rough 2022, was about to turn a corner. However, in recent weeks, investors have grown more bearish about Mullen Automotive stock. Shares in the electric vehicle maker have fallen by about 50% over the past few weeks. While Mullen has yet to retest its all-time low, 18 cents per share, it's awfully close, changing hands today for around 22 cents per share. This further dimming of sentiment may at first suggest it's best to avoid Mullen Automotive. However, upon taking a closer look, it's clear that adopting the market's bearish stance on this stock isn't necessarily the key takeaway. Rather, for some investors, it may just well be worthwhile to consider Mullen at present levels, albeit with a full understanding of the inherent riskiness of the situation. With that, let's dive in and find out why. The latest with Mullen stock. Mullen's most recent price movements haven't come on the heels of zero news. That is, there has been major news lately, with the company releasing a financial update to investors on February 14th, in conjunction with the release of its financial results from the preceding quarter, ending December 31st, 2022. In this update, this early-stage EV maker disclosed its current liquidity over $100 million, as well as anticipated capital commitments, $90 million. Mullen also recapped major milestones reached over the past few months. Unfortunately, this largely positive update didn't provide much of a boost for Mullen stock. Instead, investors focused their attention on the earnings release. For the quarter, Mullen reported operating losses of $73.6 million and a staggering $376.2 million in net losses. These losses were many times above that of the operating losses, $14.1 million, and net losses, $156.1 million, reported in the prior year's quarter. But while these numbers, horrendous by any measure, have resulted in many investors finally throwing in the towel on Mullen, if you currently do not own it, as I put it earlier, this recent post-earnings sell-off is not necessarily a sign to stay away. Cautiously laying out a bull case. There are plenty of commentators out there laying out a bear case for Mullen stock. However, while a bear case can be argued, so too can a bull case, albeit more cautiously. Mullen has been, and will continue to be, a high-risk, high-potential reward situation with emphasis on high risk. Yes, there is a moderate chance that Mullen ultimately fails in its current efforts to bring both passenger and commercial EVs to market, resulting in a total loss for its investors. Still, while it may be a long shot that it achieves success with the former, success with the latter may not be out of reach. Reaching the production stage with its line of Class 1 electric cargo vans, in December the company locked down a $200 million order for 6,000 units. Expected to deliver these vehicles starting in the spring, a move to the commercialization stage is just around the corner for Mullen. That's not all. There is plenty of potential with its Bollinger Motors investment. Mullen's involvement with Bollinger could pay off as the electric truck startup advances the development of its B4 chassis cab designed for the commercial trucking market. The takeaway: given the company's progress in the area of commercial EVs, I wouldn't write Mullen Automotive off completely. However, while not necessarily a no-go situation, let me reiterate that this isn't a stock for all investors. This is not only due to the moderately high risk that Mullen Automotive investors experience a total wipeout. Even if Mullen rides out its current challenges, it may take some time for the payoff moment to finally arrive. To top things off, shares are likely to remain highly volatile in the meantime, especially as the market absorbs the prospect of this highly ambitious but cash-strapped company conducting additional capital raises. That said, if you have a high risk tolerance and are able to handle any volatility that may arise along the way, feel free to add Mullen Automotive stock to your portfolio as a small speculative position. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.